Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and we've adjusted our show until we get back into the studio. I'm joined today by Bob Icino. Welcome, Bob.
Good to be here, Jeff.
Well, earnings season upon us, Bob, and we have 88 S&P 500 companies reporting this week. But what else has your attention, Bob? There's a lot on the horizon.
Well, there's a couple of things. Obviously, we still see tech making the move that it's been making. And when you look at the earnings so far, you're seeing that on sector level net profit margins, tech is less bad than the rest of the sectors. Same thing when you're looking at the 5-year average, tech is less bad. So it seems like the tech leadership kind of makes sense.
Less bad. I like that. Maybe Webster's Dictionary puts that front and center in 2021. But let's talk about two topics today, Bob. I want to really focus on precious metals, and then let's get back to the red hot NASDAQ 100. Sound good?
It sounds good to me.
Well, gold seemingly has gotten really comfortable above $1,800, and silver is now surging back above $21. Is this really a function of the additional stimulus package we saw delivered by the European Union?
It is. I think it's a driver of it. And I think the potential for global inflation is starting to sit in. Gold is closer to its all-time high than silver is. Silver is still $30 away. And I think that's why we're seeing silver, at least very recently, outpace gold.
And I'd be remiss if I didn't mention the U.S. dollar weakness. Here we are looking at 95 handle. That's really supportive of precious metals in general as well, correct?
Yeah, for metals in general, not just precious. If the dollar's weaker, that's a tailwind, all else equal.
All right, well, let's transition gears. I know you're chomping at the bit to talk about NASDAQ futures. We did see the NASDAQ futures top 11,000. So this earnings season, is it about to heat up? Because I know about the next week, we have all the big boys, the Amazon, the Apples. I think we have Microsoft coming up first. So what's your thought process as we go into the heart of the tech earnings season?
Yeah, we've also got Intel, we've got Tesla for what's that worth, or for what that's worth. We've got Facebook. So all of that will be drivers of this sort of third wave higher for the NASDAQ. Definitely looking again at a sector that is less bad or less worse than especially financials. So it could continue to lead if these earnings can actually drive it.
And I think you have to look at individual names inside the NASDAQ 100, like Amazon, up nearly 75% year to date. Certainly, in the wake of COVID-19, Amazon is prevailing. But we talk about using E-mini futures, even the micro E-mini futures in the NASDAQ to potentially mitigate risk or gain exposure. I think it's a good idea to get a better understanding of those different tools offered, Bob.
Yeah, these CME products are great because you can have one or two big stocks really outperform, whereas the NASDAQ index itself maybe doesn't catch up. So, in terms of hedging, the micros specifically, and then obviously the upcoming options on the micros that we have.
Yeah, that's exciting. I don't know if anyone knows about here at the CME, but the micro options is going to be on the S&P 500 and the NASDAQ 100. It's coming out Sunday night, August 30th for the trade date of August 31st. But again, another opportunity, another tool in your toolbox to mitigate risk as you define risk in the options on futures. Well, Bob, I want to thank you as always. We want to thank you for tuning in to Striking Options. Please tune in every week as we will continue to strike options.